continuous streams of data. It is really two computers, but only one is operating the system. The other with the same vast memory.
Okay, welcome to Across the Chain. Where are we this week? We are lower and lower. This past weekend, we got down to 17,600, somewhere around there, just above. We definitely are going to check out the market and look at what's going on over there. But we're still on this quest of within crypto winter. Where is the end? Like, are we there yet? Where's the bottom? Is there anything historical that we can go off of on this? And then my perspective on that and where the bottom is, and some of the other videos I've released this week, it's all mostly talking about deleveraging, and which is what we're seeing this week, where we're seeing massive liquidations on huge firms like Celsius or Three Arrows, right? So I think there's more to come, and then you have the miners, right? You've got miners who this is actually kind of ironic that the cost of mining per Bitcoin is roughly around 17,500, around that area, and that's actually where we saw that it bottomed out. But we're starting to see miners move Bitcoin over to exchanges to liquidate so that they can operate their business, which is, that's going to bring us down even further. So I don't want to run too far off of a tangent, but to say we are in a massive problem right now. There is a huge deleveraging event happening. We've already seen it happen. And we saw just on Ethereum with DeFi, we saw in the past 6 weeks over $124 billion. Just where to go? I don't know. It is. I don't know. For me, it's exciting to see all this kind of stuff happen. This is something I feel like the cryptosphere space, the blockchain technology, we needed to see this. We needed this to happen. And I know it's not something that everyone wants to experience, especially for investors, but this is just something that needed to happen. And it's kind of like watching this whole deleveraging event right now is kind of like watching what happened with inflation. Inflation will happen over time, and then we have different monetary policies that will balance it out. But with this last case in global inflation, where there's too many things that were compiling in making the situation way worse, from wars to supply to supply chain issues to supply and demand. A consumer price index plays heavy into that. Tightening monetary policies, that so many COVID, printing money and just giving it everywhere, giving it to businesses, trillions of dollars printed and given to businesses to help stabilize the economy, with no path to return that cash, and not even no path, just actually not telling businesses they don't have to repay it, allowing them to apply to never have to repay these trillions of dollars that went out. I mean, what did we think was going to happen? And then this all plays into crypto, and crypto blew up during COVID, and people were in front of screens at unprecedented rates. Like, they were engaging in all of these different platforms that they likely wouldn't have been engaging in if they were in their office at work. I don't. This is a lot, right? So, all right, let's dial it back so I don't go too far off of a tangent. But let's check out the market, and then we'll dial back to this, and we'll go over some of these deleveraging events that happen, and we'll see where is the bottom. And long story short, just in case you don't get to the end of this, the bottom is wherever the institutions are, right? So all these institutions that have been taking out loans against their collateral, like their crypto collateral, when they're done selling off, when they've realized their bottom, I think that's going to be a strong signal that Bitcoin has reached its resistance level. Meaning, or support level rather. Okay, so let's go into okay. Let's go into the market and see what's going on. Okay, all right. So we've got the crypto market here. Yes, I accept these cookies. Thank you very much. All right. Looking at the crypto market, we can see that Bitcoin is trading at 20,385. It's up 0.39% in the last 24 hours. It's down 2.96% in the last 7 days. Ethereum is trading at 1,096. It's up 1% the last 24 hours. It's down 0.89%. So basically in the last week trading sideways. Let's get past Tether and USDT or USDC rather. You've got BNB, which is outperforming both Bitcoin and Ethereum. BNB is at 2.63% in the last 24 hours, 3.62% in the last 7 days. Cardano is down 0.52% in the last 24 hours, down 5.4% in the last 7 days. This is likely down more than the rest because they announced that their Vasa hard fork was delayed. So that's something to take into consideration. XRP is outperforming Cardano as well as Ethereum and Bitcoin. It's at 1.39% gain in the last 24 hours, 3.93% in the last 7 days. XRP is I feel like their case with SEC is starting to wind down. Maybe, hopefully, we can get some precedent with XRP, but they're definitely something to continue to watch. They are trading at 32 cents, 32.77 cents. Solana, wow, outperforming everyone else. We've got 5.44% gain in the last 24 hours and 16.61% gain in the last 7 days. They're currently trading at $36.92. Solana has been having some issues with their blockchain, so it's nice to see that there is some investor confidence going into them. What's crazy just to see with Solana is they were trading at, I don't know, like 160 something like within 6 weeks ago. As everything else, everything else is down like 75%. So it's that's good to see some investor confidence go back into Solana. All right, we're just gonna do that brief update with where the market is right now. Let's slide right into some of our articles here. These articles they all have a common theme. It's hitting on this whole deleveraging event, right? It's hitting on the fact that crypto is backing crypto, and that's not a good idea because when the king of all crypto, Bitcoin, goes down, the whole market collapses, right? And we don't really want to see that. And so I think this is a really good opportunity. Why this whole deleveraging event, it's causing this domino effect. And what excites me about this is that this is kind of like a cleansing that's happening right now with DeFi. We're seeing all the ways not to run DeFi, right? And so let's just go into some of these articles, right? So you've got the crisis at Celsius is rocking DeFi and crypto. So Celsius froze withdrawals. And that obviously, because they wanted to stop, what they say, virtual run. Yeah, they wanted to, in an effort to stop the virtual bank run. This is going to scare people, of course, right? And as it did, they were trying to protect their liquidity. But the question is when we're talking about everything being decentralized and transparent, why is it that these big companies like Celsius, how come we don't know how much they have, right? Why don't we know where their liquidity stands right now? We know that they gave way too much money to Terra Luna. They said that they got out before the crash. I don't know why they would kind of talk about that, because there were already conspiracies saying that they're the ones that caused the crash, and maybe they are the ones that caused the crash. Who knows? But they're obviously having liquidity issues. You've got crypto hedge fund 3 Arrows. They failed to meet their margin call. That's no bueno. We do not want to see these failures on margin calls to come through. This is going to send them to bankruptcy, right? This is not good at all, right? They're losing their liquidity positions. BlockFi customers are concerned that it lent too much money to 3AC. So you've got BlockFi giving to 3AC, you've got 3AC giving to Celsius, or vice versa. You got Celsius giving to Terra Luna. You got all these people. It's interconnect. It is dangerously interconnected. It's scary, and I think it's showing that we shouldn't be so interconnected. I think the businesses should be interconnected. What's scary is that everything, all of these cryptos are backed against one another, right? And these are institutions. When you go and you look at projects, there's thousands of projects that are on BNB and Ethereum and Solana and Avalanche and all these the most, if like 99% of these projects are paired with the blockchain token. They're paired with Ethereum. They're paired with BNB. This is not good. It's not good for investors, right? It's not. It's misrepresenting. And in previous videos I put out this week, I talked about how it's misrepresenting the value of where these projects actually stand, right? As an investor, if I go in and I look at a project and I see, oh, this project is up 300% this year. Wow, that's incredible. I like the white paper. I like what I'm seeing. The team is active. Boom, let's do it. I like it. It seems like a good investment. Let's put our life savings in it. But when you actually look at it and you say, all right, well, they're paired with Ethereum, they're paired or BNB. We look at where BNB did that year, and you see BNB went up 300%. Okay, wow, I almost just invested everything I had, which you shouldn't do anyway. I'm just being extreme, into a company because I thought that they were up 300% this year. They're really not. BNB's up 300% this year. And again, this is just an example. So because BNB is up 300% and they're up 300%, that means that project is up 300%, assuming that there were no buys and sells or that the volume was neutral. That's really scary. I almost made an investment decision based on BNB, not on this actual project. If that's the case, then I should really just invest in BNB. I shouldn't invest in this project, because although it is a compounding effect, it goes both ways, and that's what we're seeing. You've seen these massive growths in companies, in projects, and you're seeing them fall twice as fast. So because these other assets are losing value. So if you look at our company, which is DCAP, and I know that when we started across the chain, we said that these would be separate, and I feel like we're just in an extreme situation where I am going to talk about DCAP, right? So we have a company, DCAP. We have a token. That token is backed by real estate assets. Why did we choose real estate assets? We chose real estate assets because, and I know we got to get into some of these other articles, but we chose real estate assets because of what's happening right now, because we didn't want or we also chose to be paired with USDC. So if Bitcoin goes up or Ethereum or BNB goes up or down, it doesn't affect the price of DCAP. We chose to pair with a stable coin so that the value of DCAP is dependent on DCAP. It's dependent on our investors buying and selling. It's dependent on the revenue that we're generating with our company, right? This is what crypto needs to learn, and this is what crypto really needs to do. These crypto lenders, they should be working with one another. They should be supporting one another, but they shouldn't be over leveraged on collateral that's so volatile. They should take their Bitcoin and buy real estate. They should take their Bitcoin or their USD or whatever and buy gold, buy silver, buy other commodities, buy assets that are stable, so that those assets can back their crypto investments. And that's what I'm hoping the lesson that we learn here with this massive deleveraging event is. So going into, we just talked about BlockFi. Going into the crypto lender, Babel Finance, they halted withdrawals due to liquidity pressures. You've got crypto crash wreaking havoc on DeFi protocols. Basically what we were talking about just now. I mentioned earlier, I believe, at the beginning of the show, $124 billion in the last 6 weeks in DeFi on Ethereum is just gone. It's gone. It'll return, but it's gone. And it's this massive deleveraging event. So is this going into this next article? Crypto crash exposes regulatory regulators complacency. Is this? Did they do it on purpose? Right? Are regulators being complacent? I don't know what this article says exactly. I just like the headline. But are they being complacent on purpose to crash crypto? To show that we shouldn't be doing it? I don't think so. Crypto's not going anywhere, especially blockchain technology isn't going anywhere. And if you have blockchain, you need crypto because crypto is what you use to transact on blockchain. There are some people that have been, they just don't know what they're talking about. They've been talking about like, well, why can't we keep blockchain but not have crypto? Well, maybe you should figure out how blockchain works. This one says in the article, if regulators thought crypto was a dangerous place that lured investors into too good to be true opportunities, they have to ask themselves some searching questions on why they have been so slow or reluctant to cut across the unregulated industry. So that really gave nothing to senior global central bankers have said cryptocurrencies are essentially worthless and labeled the sector as the Wild West of finance. But inaction across the regulatory spectrum has allowed speculative bubbles to inflate. I was watching Jerome Powell this morning talk to the House Finance Committee or something within Congress. And he made a really good point, sort of escaping my mind right now. I believe he made this point. I need to go back and check it out. But they were asking him about regulatory framework, like who's going to regulate crypto. And I believe he mentioned that, you know, when oil came in to play for the first time and some of these other energy sources, he does say that when these new technologies come in, that new regulatory committees or sectors or frameworks are created, right? And how those sectors work, or like, you know, in that energy sector, or let's dial it back to digital currencies. He alluded to the fact that there is likely going to be a committee or framework that's very specific to just digital currencies, right? So I think that's what we're seeing here, just as we saw with oil, not to overuse that reference, but when oil first like started becoming a huge energy source that the entire world basically runs on now, their companies were popping up all over the place like we see right now. And the mass majority of them failed, right? Just like we're seeing right now. This is what happens in new technology. It just does. And what ends up happening is everybody runs to it. Everybody gets involved. A lot of people, a lot of money goes into it. A lot of things fail. And it's good because it's showing us how not to do something. We're just evolving into a better method, right, of operating within this new technology. And that's what I think we're seeing right now. It's unfortunate that investors feel it, but it is just a byproduct of technological growth. So I don't want to say that regulators, what this article seems to be alluding to is that regulators are purposefully being complacent to crash crypto because they don't like it. I don't really want to go down that conspiracy path. Next and last article, Bitcoin miners sold their entire May harvest in this report. So Bitcoin miners are finding it extremely hard to continue their operations at the cost of production has exceeded the profit. So this is what they're talking about here right now is, I think the level is set around 17,500. Did they just discuss it in this article? 17,000. Well, that's like where our bottom was. I believe that the production is around 17,500, which was very coincidental that that's basically where we bottomed out. But dialing this all back to the big question is, where is the bottom, right? Where is the bottom? And the bottom, as I said before, I think the bottom is going to be where institutions are done deleveraging, right? They're not selling off Bitcoin or some of their other assets. Miners are in a place where well, what's inevitably going to happen is miners, unless they can get a loan, are going to end up going out. A lot of them are going to end up going out of business because they can't operate. Right? It's costing too much to operate. They're just hemorrhaging money. Right? So they're going to end up, in order to save themselves, they're going to end up selling off the Bitcoin that they've been accumulating for months or years, and that's going to push Bitcoin down further and further. The bottom could be 10, could be 12, could be 7,500, could be 3,000, could be 0. It's not 0, but it's my belief that this technology is here to stay, and that we need cryptocurrency to operate on this technology. You need the coin for whatever blockchain that you're on. And so it definitely is here to stay. It definitely is a more transparent way to do business, and we should be regulating it. I think that DeFi should be more focused on having a more diversified collateral base outside of crypto, right? So talking about being interconnect with other commodities, with other foreign exchanges or currencies, with companies, products, with anything other than itself. Because if you're backed against crypto, and when one crypto goes down, all the cryptos go down, that's not good. And for the projects and companies that are building tokens, don't pair with the blockchain token, right? There's no need. Pair with a stablecoin. Show your investors your worth. Show investors what your company is worth, not what Ethereum is worth or what BNB is worth. Show them what you're worth. That's my message. I'll see you guys next week. Take care.